Thank you very much, Kelly, for those great words. Let me start by really appreciating Kelly Bentley, the Chief Executive Officer of the DX5, my friend Hari Hare, Chairman and Content Director, DX5, Landre from Equity Bank, distinguished guests, ladies and gentlemen, good morning. Good morning again.
Good morning.
Good. I am indeed delighted to be part of this event today that marks the first day of the African Fintech Summit. Let me congratulate DX5, formerly known as CIO Africa, for hosting this summit, which brings together the financial industry players with the ICT players. We all agree that the rise of fintech has been a dominant force in the recent years, and it is only getting stronger. Kenya is one of the leading financial and tech hubs in Africa and has been a driving force in financial inclusion, with the country's biggest achievement being mobile money transfer. Forums like this will motivate traditional banks to adapt new innovative ways in their businesses model to survive the disruption that the new tech is causing. I would also like to encourage financial institutions to take advantage of the technological advances made in the country as well as in the larger East African region to create innovative products that contribute to improved and efficient business environments, increased accessibility, connectedness, and better standards of living. Ladies and gentlemen, fintech is a $500 billion industry that is growing rapidly. Analysts predict that the industry will grow to $10 trillion by the year 2025, which is only 3 years away, with mobile money underwriting much of this expansion. By providing a convenient platform for sending and receiving money and short-term credits, mobile money has become a key mechanism for poverty reduction in Kenya. The value of mobile transfer has also increased drastically. Banks can take one of two approaches to fintech disruption. One, they can either ignore it, or they can embrace it and learn how to use it to their advantage. There are a number of things that banks should focus on to ensure that they are not left behind in the fintech world. Customer experience. When we look at customer experience, banks need to focus on improving their customer experience through digital channels, mobile apps, and bots. Customers want quick access without having to wait on hold or waste time navigating complex menus. There's also the element of customer data and analytics. Banks should also invest in building up their customer data assets so that they can better understand where customers spend their time online, what information is important for them, who their influencers are, both online and offline, which services they value most highly. This will provide banks better insights into customer behavior, which then allow them to make better decisions about where investments should be made moving forward. The rise of fintech has been nothing short of revolutionary. It has changed the way we think about money and banking, and has also forced traditional banks to rethink their strategies. But even with all these changes, there is still much room for growth in the fintech space. And it seems like each year brings new innovation that will further disrupt our financial systems the way we know them today. At this moment, let me pause and ask you to join me in appreciating the role His Excellency the President played yesterday by refusing to assent to the ICT Practitioner Bill. As a ministry, we passed our concern that the bill was going to stifle innovation. The bill was going to be a problem to the ICT practitioner and the entire ICT ecosystem. And again, we thank His Excellency the President for not assenting to that bill. Ladies and gentlemen, admittedly, Kenya's emergence as a technology giant in the continent owes it to the government's deliberate focus on developing policies, legal and regulatory frameworks, and institutional reforms aimed at improving the universal access to ICT services, building capacity within the ICT sector to facilitate growth of the digital economy, the e-government services, also together with regional integration. Let me also mention that data protection and cybersecurity threats remain a factor in fintech. The government enacted the 2018 Computer Misuse and Cyber Crime Act, which covers the protection of critical infrastructure, as well as issues related to mobile money, cyber attacks, blockchain, and cryptocurrency. Also, the Data Protection Act of 2019, which was also enacted to fill the significant gap in the digital trust environment in Kenya. Guided by the Vision 2030, the Cabinet Secretary, Ministry of ICT, Innovation and Youth Affairs, launched the National Digital Master Plan during the Connected Summit in April this year, whose objective was to reduce the digital gap. This document is largely informed by the National ICT Policy of 2019, which now guiding how ICT as a foundation is creating a robust economy, thus improving the livelihood of Kenyans. The government has continued to guide the ICT sector, and Kenya has gained global recognition for innovation and increased ICT infrastructure through the expansion of the national fiber optic backbone infrastructure that now covers almost every part of this country. As I conclude, I would like to state that digital transformation is no longer just an agenda for the Ministry of ICT. It needs both the government and private sector efforts in achieving its purpose. The big payoff is through adoption of digital technologies across every sector of the economy. Let me also still emphasize that as government, we will continue to facilitate and to work together with the private sector in making sure that we have a conducive ICT ecosystem. I wish you fruitful deliberations during this conference, and let me take this opportunity to thank you very much. I thank you.